Now available on Tata Sky channel number 526.
Straight up the big story that we're tracking over here. RBI Governor Raghuram Rajan has cut the repo rate by 0.25%. This move brings benchmark interest rates to a 5-year low. Governor Rajan said marginal cost-based lending will help in rate transmission and borrowing is set to become significantly cheaper. Let's listen in then to some of Raghuram Rajan's key highlights from the Monetary Policy Review today.
Has the rate cut been enough? We think it is what is sensible given the uncertainties surrounding the economy right now. That because of the MCLR, we actually already have a rate cut of 25 basis points to 50 basis points before the policy. And as this winds its way through the MCLR over the next few months, you'll have more of a rate cut. So don't look at it as 25 basis points. Look at the composite of measures. They all add up. And borrowing rates are coming down significantly in this economy. The effects of the liquidity measures will also help transmission, because banks have continuously been saying it's because of liquidity tightness that we can't transmit. Now we've given them enough liquidity, they have the ability to transmit even more. So my hope is we will see significantly more transmission in the next few months, and we have to be careful therefore that we are doing what is appropriate given the state of the economy.
Now, the government says RBI's decision to cut interest rates is in line with expectations. However, the government says banks still need to do lots more in terms of the transmission of those rate cuts. Listening to what Minister of State for Finance Jayant Sinha and Economic Affairs Secretary Shaktikanta Das had to say.
In coordination with the RBI, we really have to amplify both the fiscal initiatives as well as the monetary initiatives that are now in the pipeline. And that really is what we are working on now, is to amplify the policy actions that we have undertaken. As we do so, we believe that we will provide the boost to the economy that it needs. We obviously have to wait and see what happens with the monsoon and with aggregate global demand.
As you are aware, government has already kept the fiscal deficit under control. 3.9% in 15-16 and 3.5% is the target for 16-17. Inflation is low. RBI has projected an inflation of about 5% for next year. Government has also reset the small savings rates. And so under these circumstances, the RBI's announcement of 25 basis points is therefore in line with the direction in which government would like the economy to move.
Now, it's not just the government that is cheering RBI's move. Bankers too are happy about the rate cut. HDFC's Keki Mistry says that while the 0.25% cut was in line with expectations, there is still further scope for rate cuts in the current financial year. Take a look.
I think it's a very good policy. The most important thing was not just cutting rates. I think the more important thing was to infuse liquidity in the system, because we have seen that in February and for a large part of March, liquidity in the system was very tight. And I think if the liquidity question can be addressed, then I think that will go a long way in bringing rates lower in the system. I still believe that there is scope for 50 to 75 basis points cut in the course of the calendar year, of which we've seen 25. So I think there is scope at least for 25, maybe 50. But a lot depends on monsoons, a lot depends on global events. Any reduction in funding cost, any reduction in the marginal cost of funding would immediately result in an improvement in margin, which we would pass on to customers by reducing our lending rates. So it's not that banks alone have the ability to reduce lending rates. If costs come down, which they will, then obviously we will have a similar ability. So I don't think transmission will be that much of an issue, because when banks have moved to a marginal funding cost, and more importantly, government has reduced the small savings rates, the ability of banks to lower the deposit rates and therefore lower their overall cost of funding would be a lot higher. And if their marginal cost of funding comes down, then naturally the benefit will pass on to the customers.
So clearly there is cheer for home buyers as home loans are set to get cheaper, especially with banks now adopting the new marginal cost of funds lending rate. It's an added advantage for home buyers, considering banks will now be forced to slash their lending rates. How big of an impact is this going to be for home buyers like you and me? We have Amita Balachandra standing by with all those details. Amita, take it away. Tell us more.
Well, this of course is good news for home loan borrowers, as home loans are set to get cheaper. Of course, RBI has gone ahead and cut its repo rate by 0.25%. Now, the idea of course is that banks will be forced to slash their deposit rates, which in turn is going to force them to slash their lending rates. Now, we must also remember that starting the first week of April, banks have adopted the MCLR system, or marginal cost of lending rate system. Now, up until now, banks used to follow the base rate system. Of course, they couldn't lend to borrowers below that base rate. Now, of course, with this new formula, interest paid on deposits are now going to be linked on interest that they get for home loans, which means the process of transmitting that rate cut is going to become more transparent. Of course, we also know that small savings rates have come down. So all of this is going to force banks to slash the deposit rates, which means that we could expect cheaper home loans, which also means that we could expect lower EMIs, and that is a huge boon coming in for home buyers.
Huge vote coming in for home buyers. Thank you, Amita, for that. We also have a special guest to understand this better. Harsh Rungta, CEO of ApnaPaisa.com, joining us live here on Magic Bricks now. Harsh, thank you so much for taking time out to be with us. Tell us, first up, how is this rate cut going to impact home buyers?
I think the cut in the RBI's repo rate was widely expected, and I think this is one among the various steps. We have had, of course, the cut in small savings rate with the promise to reset them every quarter, and I think with this rate cut we will see a cut in deposit rates in this quarter from the banks, which in turn will translate into lower lending rates. So I think we are going to see a fall in both deposit rates, and then after a lag, a fall in lending rates as well.
Harsh, starting the 1st of April, banks have to compulsorily follow marginal cost of funds lending system. With RBI's new MCLR lending system kicking in, is there more scope for banks then to transmit rate cuts?
So the whole MCLR system is been designed for faster transmission, and I think with the RBI watching, that should happen. The only key is, would the faster transmission happen only for corporate clients, and will it not happen for retail clients? I think those are some of the things that remain to be seen in terms of how the MCLR system actually works out. It's not a very transparent system, and how it actually pans out, we will have to see over the next few quarters. I suspect that it may drop, in terms of transmission, it might be much faster for corporates or for non-retail buyers, non-retail borrowers, than it is for retail borrowers.
Harsh, all said and done, MCLR is something that will benefit the new borrowers. Old borrowers are yet to benefit from this. Should then existing borrowers shift to the MCLR system?
You are absolutely right. The existing borrowers who are on the base rate system, or if some of them are still on the old PLR system, they will anyways not get any benefit under the MCLR system. They can shift, but there can be a cost that the bank can charge. They are allowed to charge something for shifting to the MCLR system. So whether they should shift or not, I think I would wait and watch in terms of how the MCLR system pans out. But one thing that you should definitely do is, definitely you must explore the option of shifting your loan completely to another lender, and at that time also check what your existing lender is willing to give you, and only then you decide to shift, whether within the same lender into the new MCLR system, or to a completely fresh lender, of course with the MCLR system.
Harsh, finally, some banks announced the MCLR system, but what we have seen is a maximum of 0.1%, which is barely nothing. Tell us, will we have to wait even longer?
I think only the banks can answer that question, but as I mentioned, the system itself is not hugely transparent. So it's very difficult to predict exactly when first of all, the rates have to get lower from here on before it starts affecting the announced MCLRs. So I think banks were waiting, a lot of banks were waiting for the credit policy to announce their MCLRs. Please remember, any loan written 1st April onwards cannot, has to be only be on the MCLR. So I think every bank will announce their MCLRs, and then for further reduction we will have to see how the interest rates behave. And as I said, I suspect that the manner in which the corporates will get the reduction will be much faster, because they have a far better bargaining position versus the retail borrowers who is not in a position to bargain with his lenders.
All right, Harsh, we'll let it go at that. Harsh Shungta, CEO of apnapaisa.com. Thank you so much for taking time out to be with us here on the Property News on Magic Bricks Now. Let's then also get in a developer's perspective on this. Joining us live on the phone line is Niranjan Hiranandani, Managing Director, Hiranandani Group. Niranjan, thank you so much for taking time out to be with us. Tell us, developers have been pushing for a rate cut for a long time now. How big of a boon is this for home buyers, and do you think banks will now be left with no choice but to slash lending rates?
I don't know about the choice, because I think the banks are far stronger than the individual home buyers. But one thing is certain, that today you must understand that the non-performing assets or the NPA in the home loan segment is the lowest in the country. It's less than 1%. Hence, what has happened is the banks are pretty enthusiastic to focus more on giving home loans, and hence will be competitive and more competitive. All the other segments like infrastructure, like steel, like other segments, huge NPAs have been accumulated by the banks. So I think the competition in the banks will force the banks to actually lower the interest rates, because they would like to take a greater share of the home loan market. So I don't think it's a question of being fair, just, etc. I think simply the competition in the banking segment itself will push the banks to actually move towards giving much more lower rates of interest, and this competition will help the consumer in the long run. I'm sure it's going to happen. NPAs have been lowest in the home loan segment, so the competition is going to become very fierce, and that is going to reduce the rates of interest, not just the lowering by the Reserve Bank.
All right, Niranjan, tell us, how will this impact the real estate industry? Do you think it will have any impact whatsoever on prices?
I don't see this issue on prices in the short run, but the answer is yes. In the long run, it will certainly make a lot of difference. But you have to understand that in the short run, the effects of the regulatory bill has to be seen, because with the impounding of 70% of the monies in respect of the monies paid by the purchaser, which is to be impounded into a separate account and used specifically only for that particular building, is going to reduce the liquidity into the market, and we don't know what is the increase in cost because of that. So I don't know what is the final effect on prices because of this home loan cut, but certainly the home buyers are definitely benefited from the long-term loan that they are going to purchase. Big benefit coming to the consumer, and especially over a period of time, I think they are going to be very happy.
Home buyers are going to be happy is the word coming in from Niranjan Hiranandani. Thank you so much for taking time out to be with us here on the Property News on Magic Bricks Now.
You can watch live TV on our website mpnow.in. Find us on Facebook at facebook.com/Magic Bricks Now. And don't forget to click the like button. You can also follow us on Twitter at Magic Bricks Now. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/Magic Bricks Now.